Thank you for joining me. I'm Alex, and I want to talk about Exxon Mobil today, or Exxon Mobil, depending on how you want to pronounce that. So what they do is oil, mostly, also gas, and by that I mean gasoline, and also gas. But, all kinds of fossil fuels and all kinds of refining and refined products and everything. So current price $43.01, which gives them a market cap of $182 billion. At one point, they were the biggest company by market cap in the world. Currently, they're not, and it's not close anymore. It kind of used to be, but, there's companies that are kind of trying to get to 10 times their market cap. So that's where we are today. Dividend yield 7.89%, which is ridiculous, with the payout ratio of 207%, which is equally ridiculous. Obviously, you can tell that's kind of not working out in the long run. Revenue $256 billion, which is down from the previous year, and I don't think that they had a decline in revenue in a long time, so that's a bit of a problem as well. And that is pre-COVID. The fiscal year ended 12/31, I think, 2019, and so there really was no COVID when this happened. Earnings $14 billion, which is also down significantly. So again, bit of a problem. PE of 26 doesn't sound too bad, but forward PE of 122, ridiculous, just ridiculous. Total assets $363 billion. Total liabilities $164 billion, which gives them a total stockholders' equity of $192 billion. And that is surprisingly steady from the previous year. So overall, obviously for a growth investor, this is not the company for you, not only because there's no current growth, also because it's a huge company that doesn't really have a lot of potential on the upside. For a dividend investor, obviously this looks very interesting. However, payout ratio over 200% is obviously not going to work out long term. We are going from a PE of 26 to a forecasted PE of 122. A PE of 122 means they can pay about 0.7%. So overall, not all that great, and I don't even know if I did that math right. Definitely not sustainable in the long run, and the shrinking revenue and shrinking earnings also a huge problem. So you may get a dividend, you may get the dividend for a while, but if they ever cut the dividend down, the stock price might go down significantly, and you might lose all that money that you made with the dividends. So I really don't think I would buy that at this point. For a value investor, obviously, kind of the same problem. The revenue is shrinking, earnings are shrinking, the PE is ridiculous. The balance sheet is nice, though. You got to hand it to the balance sheet. So overall, definitely do not recommend the stock to anyone at this time, and I really don't think that it's going to get better from here. They kind of need an oil price over $40 to make any profit at all, and I don't think if we're getting significantly over that anytime soon or even in the future. So I can't recommend this stock right now. I really don't see a future for this stock, and so I'm definitely staying away. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.